Every day for the past 4 years, I've said, buy Bitcoin, don't sell the Bitcoin. I'm going to be buying more Bitcoin. I'm going to be buying Bitcoin at the top forever. I joked with Dave Portnoy today. He said, I missed it at 10,000. I missed it at 20,000. I missed it at 100,000. I said, Dave, it's still less than $1 million a coin. You're getting a 90% discount from $1 million a coin. I'm sure that I will be buying Bitcoin at $1 million a coin, probably $1 billion a day of Bitcoin at $1 million a coin. And so I think it's a very simple idea. Just keep buying Bitcoin with your spare capital. It's going to appreciate against the dollar forever.
In this interview, MicroStrategy Executive Chairman Michael Saylor shares his long-term bullish perspective on Bitcoin, particularly for investors. Here's a breakdown of his key arguments and advice. Saylor emphasizes viewing Bitcoin as a long-term capital asset, akin to real estate or artwork held for decades. He suggests investing only money that you won't need for at least 4 years, ideally 10 or more. Bitcoin should be a part of a diversified portfolio that includes other scarce and desirable assets. Before we delve into the video, if you want the latest crypto news, market updates, and expert insights from the top minds in the industry, be sure to hit that subscribe button and turn on notifications. Stay informed, stay ahead, and never miss an opportunity in this ever-changing world of the financial market. Thank you for subscribing to our channel. Saylor advocates a consistent buying strategy, regardless of short-term price fluctuations. He recommends dollar-cost averaging into Bitcoin every quarter, allocating a portion of long-term savings. Investors should not be overly concerned with Bitcoin's near-term volatility. MicroStrategy's strategy is to consistently buy Bitcoin, irrespective of the price. Saylor states, every day for the past 4 years, I've said buy Bitcoin, don't sell the Bitcoin. I'm going to be buying Bitcoin at the top forever. Saylor expresses strong confidence in Bitcoin's long-term appreciation. He believes Bitcoin will appreciate against the dollar indefinitely. Saylor expects Bitcoin to be the most valuable asset in the world a century from now. Let's watch Michael Saylor's video interview.
Every day for the past 4 years, I've said, buy Bitcoin, don't sell the Bitcoin. I'm going to be buying more Bitcoin. I'm going to be buying Bitcoin at the top forever. I joked with Dave Portnoy today. He said, I missed it at 10,000. I missed it at 20,000. I missed it at 100,000. I said, Dave, it's still less than $1 million a coin. You're getting a 90% discount from $1 million a coin. I'm sure that I will be buying Bitcoin at $1 million a coin, probably $1 billion a day of Bitcoin at $1 million a coin. And so I think it's a very simple idea. Just keep buying Bitcoin with your spare capital. It's going to appreciate against the dollar forever. I think you should think of Bitcoin as a long-term capital asset. So if you have money you don't need for 4 years, or even better yet, for 10 years, you put it into a portfolio. You might hold scarce desirable real estate. You might hold your favorite artwork. You might hold some portfolio of companies you're going to hold forever. I think a part of that is Bitcoin. So I say dollar cost average into Bitcoin every quarter, sweep some long-term savings into Bitcoin, expect to keep it there for a decade or longer, and don't get too worked up over the volatility in the near term. I look at it like Manhattan real estate, the year is 1650, and if you had a chance to buy it in every decade from 1650 to today, wouldn't you just keep buying it? If you didn't have to pay property tax and you could hold it, you would just keep accumulating it forever. There's never a bad time to buy it. There's a Saylor tracker, you can look at it. It just shows we bought at every price point every quarter, at the highs, at the lows, at the mids. I bought it every week for the past 4 weeks in a size billion or more. I'm going to just keep buying it, and it's not that complicated. I expect that it'll be the most valuable thing in the world 100 years from now, so why wouldn't you just keep accumulating it? Imagine I gave you the chance to buy 40 city blocks of Manhattan real estate 100 years ago, but there were no buildings on it and there was no rent associated with it. But you knew it was going to be the greatest city in North America, and you could buy it and hold it. It's, you would still do it, just like you might buy Alaska in 1867, even though there's no rent on it, because you think that over the next 100 years, someone else will find a way to take advantage of it. With Bitcoin, it's Cyber Manhattan. There's 8 billion people that have money. They're not going to live there, but they're going to put their money there because everybody has to park their money somewhere. And so you're just buying one block out of 21 million of all the capital in the world. It'll be the center of the digital economy. You may not know the applications, but there are applications. MicroStrategy makes a lot of money by holding that digital property. We're generating massive amounts of shareholder value from that. So you don't have to understand how we do it. You just need to hold your Bitcoin and let us drive the price up. I mean, I think low regulation, low tax, pro-innovation policies give people, especially specifically with regard to digital assets, if we have a digital assets framework that supports digital commodities, digital securities, digital tokens, digital ABTs, digital currencies, digital NFTs, so that people can innovate in the United States of America and spread those assets everywhere in the world, I think that'll be good for the world and good for the United States. Bitcoin is the one digital asset that has the most regulatory clarity in the world because there's general universal consensus that it's a digital commodity. The friction on Bitcoin has been slow approval of the ETFs, the inability to do cash create and redemption, the slow approval of the options market on the ETFs, and resistance to banks custodying and handling Bitcoin. So that's held back the asset class. I think that a favorable crypto regime will accelerate the development of Bitcoin. And I think on the digital asset side, right, just the lack of a digital assets framework for digital currencies and digital exchanges and digital tokens has put that industry in limbo. And I think we're looking for those things to be resolved with the incoming administration, and that should accelerate growth for everybody. Bitcoin is emerging as the world's reserve capital network. If you want to store your capital for the long term and you live in Africa or Russia or China or South America or even the US, your choice is local real estate or local stocks or Bitcoin. Well, people are realizing that Bitcoin is better than real estate. It's better than stocks. There's not a single company or real estate property in Africa that you would rather own for the long term than Bitcoin. So the very simple idea is buy 20 or 25% of the Bitcoin network on behalf of the US government, catalyze the development of that world reserve capital network, and then let all the Chinese and the Russians and the foreigners sell all their other assets and buy Bitcoin, and then the money flows into the United States. If you want to put a great twist on it, dump your gold, sell all the US gold, buy Bitcoin, then the trade is free because you could buy 5 million Bitcoin for the cost of the gold. You will demonetize the entire gold asset class, and our enemies hold gold in their banks, so their assets would go to zero. Our assets would go to $100 trillion, and we would control the world's reserve capital network as well as the world's reserve currency network. I don't chart it month by month, but I noticed that it's been a 60% ARR for the past 4 years and even before that point. And my model is generally that it will grow at 60% ARR, decelerating to 20% ARR over 21 years. So if you start to crank in 60% and 58 and 56 and 54, and you put that on a scale, absent the cyclical volatility, you get to a forecast, which makes sense. I think as the asset grows and matures, the volatility decreases and those the extremes of the drawdown decrease. The structure of the market determines the volatility. And so if you're going to forecast the structure of the market, you can't look backwards. It's like if you looked at a bicycle 4 years ago and I show up with a motorcycle right now, it's a different set of physics. The market right now is driven by the ETFs, driven by the options market, driven by companies like MicroStrategy, driven by the global adoption. So I think what you'll see is you will still see volatility, but you won't see the extreme drawdowns of the last cycle. You'll see a more gentle volatility. It'll surge up, it'll come back, but I don't expect we saw an 80% drawdown in the depth of the crypto winter from 66,000 to 16,000. In order for that to happen, you had to have a bunch of very poorly capitalized companies like FTX and Genesis and Celsius and BlockFi force liquidate. We don't have those kind of companies in the system now. The capital structures of the companies participating in the market today are much deeper, much more robust, and there's a lot more equity capital today. So you'll see a different dynamic. I think it'll be muted to the upside and the downside because of the options traders that are moderating the market.
In conclusion, Saylor uses the analogy of Manhattan real estate to explain Bitcoin's value proposition. Like Manhattan land, Bitcoin has a limited supply, 21 million coins. Bitcoin will be the center of the digital economy, where everyone will park their money. Even if the specific applications of Bitcoin are not yet fully understood, they will emerge over time. Saylor explains how MicroStrategy benefits from holding Bitcoin. MicroStrategy generates significant shareholder value by holding Bitcoin. By accumulating Bitcoin, MicroStrategy contributes to its price appreciation.